What's up everybody? Welcome to the Stocks channel. My name is Cory, and in today's episode we're going to take a look at this stock market correction, and we're going to talk about the critical support levels that if they do start breaking down, it means this correction could get much deeper. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so the theme of this week has been how to navigate a stock market correction so that you're ready for days like today, where the S&P 500 SPY ETF did go down negative 2%. That's another price action close below the 20 simple moving average, which is now 3 days in a row that we've been closing below that level. Remember, last night's episode had a lot of details of how to navigate a stock market correction. So if you missed last night's episode, you might want to go check it out because there is a lot of important information in there that I'm not going to have time to repeat tonight. So there's no doubt when you're looking at this price action that we're definitely in a stock market correction, and from the highs to the lows we've now dropped about 4%, which is completely normal for a stock market correction. However, anytime you're in a stock market correction, it does become a little bit like a falling knife, and you never know exactly where the bottom is going to be until the bottom is already in and you see that bounce. So remember to have very disciplined risk management in the stock market, especially during corrections. So on the Stocks channel Discord, I always suggest having a 50% cash position. And when we did get that bounce yesterday, that was a great time to take some profits into that resistance level at 381. If you didn't have at least 50% cash today, you definitely felt the pain of this correction. If you had cash, you went shopping and you were able to buy some very good stocks at some very low prices. Which, as you know, if you're on the Stocks channel Discord, we did a lot of buying on some very good stock names today, and that will reward us on the next bounce that we get, and we could lock those profits in and rinse and repeat. In a stock market correction, if you are a disciplined trader, you will make a lot of money because there's always going to be buying opportunities in a stock market correction. Think of it like a fire sale Black Friday shopping spree, where all of those good stocks that you've been dying to buy are finally on sale and you can buy them for lower prices. It usually goes against human emotion because you typically want to sell when the stock market's going lower. But if you're a disciplined trader and you know to buy low and sell high, you want to take advantage of stock market corrections, and the only way to do that is by having that cash position. So looking at the trend, we can definitely see that we're getting some bearish momentum because the moving averages are crossing to the bear side, and we want to pay attention to the trend because the trend is our friend. In the long and medium term, we still are bullish because we still have higher lows and a medium term bull trend. But in the short term, as you probably already know with the price action, and as I've been alluding to, we are definitely in a stock market correction, and the price action is continuing to show us weakness, with the price action closing below that 20 simple moving average a couple days ago. So this bounce was a great time to raise cash, and you could tell from the trend that we're definitely picking up some bearish momentum. So the next thing I want to talk about is where do we want to see critical support levels hold up to prevent this correction from going deeper. Remember, we're about 4% down from the highs, which is still completely normal, but it's still possible we could drop 10 to 15% in any stock market correction. That's always a possibility. So the number one level I want you to watch on SPY is still the 50 EMA, which is right around $370. You can see that that level did hold up as support today. And if we do get a bounce next week, it will be a good time to start raising some more cash because we will likely go back and retest that level, and it may or may not hold up. If the 50 EMA does break down, we could come back down to 365, which is another very strong support level. If that level doesn't hold up and we do break and close below it, it's very likely we're going to close the gap at 358 in a flash. So from the highs down to 358, that's about a 7% drop, and we're currently only around a 4% drop. So that's still about another 3% lower that we could go, but only if we fail to hold up above this 50 EMA. If we hold up above 370 and we continue to bounce and that level never actually breaks down with a closing price below it, that means we likely saw the end of the correction and we're going back into this bull run, because remember, the medium and long-term trend are still bullish. This is a short-term correction for the time being, and we need to treat it that way until these support levels break down. As far as resistance levels go, we do have resistance at old found support at 377. And of course, don't forget to watch that level at 381, which is a very critical resistance level. If we do start breaking back over 381, this bull market is back on, and we're likely going to be forming new all-time highs. So those are your critical resistance and support levels that I want you to pay attention to on the SPY ETF. Next up is the Nasdaq 100 Triple Qs ETF. And we see the triple Qs going down negative 2.1% today, but we did hold up above that critical support level I gave you in last night's episode, around $313. You could see we did go down and test that support level, and we did bounce and close higher for the day. However, the price action did close below that 20 simple moving average today, which is not a great sign. You could see the 5 EMA is still over the 13, but it does look like it is trying to cross below the 13 in the very near future. If the 5 EMA crosses below the 13 EMA, that means we're losing our bullish momentum in the short term, and that means we need to get even more defensive on the Nasdaq 100. So the critical support levels I want you to watch on the triple Qs are 313, the 50 EMA down at 309, and of course our old support level at 308, which has been a very strong support level going back to the beginning of the year. If we start breaking and closing below 308, that will be the bear scenario for the Nasdaq 100 triple Qs. So right now, remember, in the long term, we're still over a positive sloping 50 EMA, so the long-term trend is still bullish. So in the short term, this is really just a correction to the longer term bull market. However, like I said earlier, corrections can go much deeper. So if these support levels do start breaking down, that'll be your cue that this correction could be a lot deeper than expected and we could drop that 10 to 15%. But right now, I still think this is going to be somewhere around a 4 to 6% pullback. And you can see from the Nasdaq 100 highs to today's close, we're down about negative 4.36%. So we're still within that 4 to 6% range, but we still want to be careful and watch those support levels very closely. As far as resistance levels go, watch 319 and way up here at 326. If we break and close back over 326, this bull market is back on and we're going to brand new all-time highs. However, we will have to get through 319 before that, and we will have to hold up above these critical support levels. Next up is the Dow Jones DIA ETF, and we did see the Dow Jones coming down to support at $300, and we did close barely below it. That is going to be the strong support level on the Dow that we don't want to see break down. You can see the price action is already below the 50 EMA, which is never a bullish sign, and we are developing a lot of bearish trending, and the 20 simple moving average is rolling over and starting to negatively slope. So the Dow Jones is still by far the weakest of the three indices, with the Nasdaq 100 leading the way and still looking the strongest. However, you usually want to see all three indices moving together, so we don't want to see the Dow Jones going into a bear market because that will start hinting at a future bear market for the Nasdaq 100 as well. It'll just take a lot longer for the Nasdaq to break down. So watch for resistance levels on the Dow at 308 and all the way back up here at 312 if we do start breaking back above that 20 simple moving average. On the ARKK ETF, we did get a price action close below the 20 simple moving average, and the 5 EMA did cross below the 13 EMA. You can see that support level at 135 is still holding up, and we did find support there yet again, and we did bounce and close higher for the day. So the ARKK ETF is starting to show some weakness, but it is still holding up above support, and it's still in a long-term bull trend, so we would still need the breakdown below this 50 EMA at 128 for this chart to start looking extremely bearish. So we definitely see bearish trending building up in the short term, but we're still holding up above those critical support levels. On the VIX, which is the fear indicator, we do see follow through with the VIX going up 9.53% today, which is to be expected when we see a sell-off. You can see the breakout was tested as support, and we did get confirmation of a bounce. So this is definitely the real deal, and the fear is going to remain in this market for the time being. The VIX would have to break back below this 28.5 level for the fear to start subsiding from this market for the market to continue to go higher. The market is not likely going to start trending back higher while the VIX is this elevated. So watch the fear indicator very closely because it's telling us that the stock market correction is not yet over. So an elevated VIX means sell those bounces and make sure you have that cash ready, because it does mean with an elevated VIX, we're likely going to see selling into the strength and the market should continue to trend lower. Next up is the US dollar, and we see the dollar still holding up below a negative sloping 50 EMA, and it does still look like it's weakly trending in a sideways market. As long as the dollar is below the 50 EMA, it's still likely it could break down and head down towards another leg lower towards this $89 support level. On gold, we're still really going absolutely nowhere and still finding resistance at 1860. Gold's either trying to come back down to test support at 1826, or it's going to continue to try to break through 1861 until it can finally successfully do so. On silver, we broke through my price target at 26.56, and we did get rejected at the next price target up here at 27.56. You can see that that is going to be a strong resistance level, and silver is probably going to continue to beat its head against the wall until it can finally break through that level. When silver breaks over 27.56, it's likely going to head to our price target at $28.40 in a hurry. It's still possible silver is going to backtest this breakout at 26.57 before it continues to head higher. On Bitcoin, we did get a false breakout of this wedge, and it did look like Bitcoin was wanting to run, and we were trading up above $38,000, but we did see massive selling, and we're back below a negative sloping 20 simple moving average. You can see we do have some nice volume on Bitcoin, but we still need to get a confirmation of this breakout before we get too bullish. My price target on Bitcoin is at $42,700, and we would need to break out of this consolidation wedge in order for us to get to that level. So right now we're still stuck in a consolidation corrective pattern on Bitcoin, and we need to wait for that confirmation that this is a real deal breakout before we get too bullish on Bitcoin. On Amazon stock, we still see a bullish trend with all of the moving averages stacked to the bull side, and the price action is still closing over the 20 simple moving average. So I still like Amazon stock going into earnings, and it does have resistance levels at 3,200 and 3,300, so those are the price targets that you want to be paying attention to. Next up is Apple stock, and we saw Apple getting destroyed today, going down negative 3.74% and closing below the 20 simple moving average. You can see that Apple got to our price targets in the 140s, and ever since then it's been selling off, looking for a bottom before it can bounce and start heading higher. The support levels to watch on Apple are the 20 simple moving average at 133, and then the 50 EMA down at 129. There is a strong support level at 126, so if Apple continues to break down, that would be the level that I would watch the closest. Don't forget, Apple's a market moving stock, so as long as it continues to sell off, it's going to be very difficult for the stock market to stop selling off while its market moving stock is continuing to plummet. On the financial sector, we're still looking bearish with the price action closing below the 50 EMA and a negative sloping bear trend, so it doesn't look great for the financials, and if they continue to break down below the 50 EMA, they will continue to trend lower. On the industrial sector, we did break down below support, and it's not looking great for industrials because we see a very strong bear trend developing, and all of these moving averages are rolling over as we're breaking through support, which means it's going to be very difficult for the S&P 500 to recover while all of these sectors are downward trending. On the healthcare sector, we're closing below the 20 simple moving average, and we're starting to develop some short-term bear trending. In the long term, we still have a bull trend, so the price action could start bouncing from here and we could go back into a bull trend. But as you saw with the other sectors, they're looking weak, and it wouldn't be surprising to see the healthcare sector start rolling over as well. So going back to the S&P 500, there's a lot to digest in today's market, and it is telling us a lot of important signs that we need to pay attention to. So the number one thing I want you to take away from this is if you are trading, you need to have a cash position and you need to be disciplined. You cannot be greedy during a stock market correction, and you absolutely have to know when to lock in profits or even sometimes sell things for a loss so that you don't get caught losing too much of your portfolio during a correction. A lot of you traders are very new to this market and you think stocks only go up forever, and as you're finding out, that's not the case. So you don't want to be over leveraged, and you always want to make sure you're being disciplined with a cash position. So remember, if you need help in this market, consider checking out the Stocks Channel Discord. We're a very disciplined and profitable trading community, and being a member of the Discord could absolutely help you navigate a stock market correction like a pro. So remember to watch those critical resistance and support levels very closely, because they are going to be the key to tell us when this stock market correction is either over or if it's going to continue and we're going to head much lower. So next up, let's check up on the Stocks Channel Hot Stocks. Welcome to Hot Stocks. Our first hot stock of the night will of course be Tesla stock, and we do see Tesla finally starting to show signs that maybe that fifth wave is over and it's time for a correction in Tesla. We saw the price action going down negative 5%, and we're closing below the 20 simple moving average. Like I always say, that is never going to be a bullish sign. You can see the 50 EMA is the next level of support below the 20 simple moving average, and it's all the way down here at $707. So don't get too overly confident on Tesla stock that it has to go higher because you're used to seeing Tesla scream higher. It is completely normal for stocks to go into a bear market or a correction after they had a monster move like Tesla did. Remember, I said on Tesla that it's finishing a fifth wave, and one of these price targets was going to be the top before we entered a correction. Well, every day that goes by, it's starting to look more and more like that 906 level was the key, because we did get very close to that level and we did start seeing a lot of selling on Tesla stock. After earnings, Tesla did not get what they needed to continue this juice and momentum to continue blasting through price target after price target, and it is starting to show some weakness because you can see we're closing below the 20 simple moving average, and the 5 EMA is looking like it wants to try to cross below the 13 EMA. It's not too late to reverse this course, and Tesla would need to start bouncing as early as Monday to start trending back into a bullish pattern. But right now, Tesla does look like it's starting to break down, and this would be a good time to start planning on how you want to exit if you have yet to sell your Tesla. This means that Tesla could head much lower, so I want you to watch the 50 EMA at 707 and the strong support level somewhere around $690. It is possible we don't go that low and the 50 EMA continues to catch up and the support level will be somewhere in the mid 700s, but you never want to be too sure. So if you're in Tesla for the long term, it's completely fine to just hold it through this correction and maybe even buy the dip. However, if you're trading and you haven't sold your trading position yet, you could get trapped in a bad position because Tesla could go into a month or two long bear market and you're not going to make any profit because all of that money is tied up in a trade that is a losing trade. So to summarize here, Tesla is losing its bullish momentum and it could be heading into a bear market correction because it does look like we're finishing that fifth wave. Next up is NIO stock, and we see NIO stock in a very similar boat as Tesla, closing below its 20 simple moving average, and it does look like it's starting to lose its bullish momentum. NIO stock is sort of just stuck in this sideways consolidation ever since it got to that $65 level, and it's still failing to break and close back above its 5 EMA. So NIO stock is also finishing a fifth wave, and it is very likely that we saw the top on NIO stock around the same time that we saw the top on Tesla stock. So in order for NIO to get bullish, it needs to get back above its 20 simple moving average, and it needs to try to break out of this $61 resistance level. If NIO fails to break and close over 65, we likely saw the top and we're going into that bear market just like we are with Tesla stock. Next up is Pltr stock, and we see Pltr looking pretty good today, only selling off negative 1.35% on a day that a lot of other stocks dropped a lot more. You could see we're holding up above the 5 EMA, which is bullish price action, and we're trading just below that resistance and that price target level at $36. You could see that Pltr has a very strong bull trend, and it looks a lot different than Tesla and NIO, and it does look like it wants to continue to trend higher. So I'm still bullish on Pltr, and I do think this $35 level is a good level to start adding. The strongest support level is down here at the $29 level, and you can see that the 20 simple moving average is about to get into that range. So that should be a strong support level. Do I think we get there? Not necessarily, because it is a very strong upward bull trend. However, if we did get to that level, I do think it would be a great buying opportunity. My price target for Pltr that I do think we're going to hit in the near future is all the way up here at $45. Next up is Zoom stock, and we saw Zoom stock actually holding up pretty well throughout the sell-off because at one point we were trading down around $359 and we did close much higher at $372. We're still holding up on the price action above a positive sloping 20 simple moving average, and the 5 EMA is still trading over the 13 EMA. So it's very possible that Zoom is done correcting and it's ready to start running in the very near future. For Zoom to start running, it would need to break and close over the 50 EMA at 390, and that bullish price action mixed with the bullish trending should be enough to get Zoom starting to zoom higher, which could send us up to our price target at $418. If we break and close over 418, it's very possible that Zoom is going into the mid 400s in a flash. So I'm still very bullish on Zoom stock, and this has been a great time to trade Zoom as it was going sideways or start accumulating a long position for the next run up. Next up is Salesforce, ticker symbol CRM, and we saw Salesforce also holding up really well today, only going down negative 0.42%, which, like I said before, that's not that bad for a day the stock market sold off over 2%. So CRM is showing why it's a hot stock and why it's getting ready to run in the very near future. You could see that we do have bullish trending building, and as soon as we can break and close over this 50 EMA at 228, it means that CRM can start running. We should have no trouble getting to our price targets at 232 and then the next price target at 238. If CRM can break over 238, it's very possible that we start running all the way up to 265. So I'm still very bullish on CRM, and it does look like it wants to start running very soon. So don't forget, there's a brand new hot stock that I'm bringing to you on Monday, so you're not going to want to miss it. All of my Discord members already know which hot stock I'm talking about, and I'm getting you in on the ground level daily on new hot stocks. And if you're interested in that, come check us out at the Stocks Channel Discord. You can find out how to join by clicking on the link in the description of this video. Remember, to be a disciplined trader in a stock market correction should be no big deal to you. It's very important that you have that cash position and that you're trading with discipline and you're locking in those profits. So have a great weekend, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.